Bank of America tells us one big factor will drive the price of gold and silver much higher as we move through the rest of the year, and it's not war. But given the fact that we have war right now in Iran, let's go take a look at the silver price and do an update here on Sunday night, because there is a lot going on in the world. And as we head out to CNBC, we're going to refresh and take a look at the gold and silver prices. Okay, so we have silver up a hair, about 4 cents per ounce. And we see that gold is also up about $5 per ounce. So holding steady. It's not war, guys. And we're going to talk about that a little bit later. First, I want to say thank you for joining me here in the basement, basement dwellers. Right? We love to talk about gold and silver. Please share this video. Please subscribe to the channel. Give the video a thumbs up. Number one, I want you to know that you're always welcome to come back and join me here in the basement. If you like hanging out in the basement with me, please come back. It's important. You're number one. This is not possible without you. Now, let's go take a look at some other crazy things going on in the market right now when it comes to silver and gold. And there's a lot for us to dive into. First off, we'll go here to a post from our friend, the dude. Let's look at Friday's data, okay? This is just insane. The silver market on Friday traded 610 million paper ounces, okay? 610 million. Again, this is Friday, June 20th data. That means that the paper market on Friday, okay, traded 3/4 of the annual production of all the silver mines in the world. And they're trying to tell us that the silver price is not manipulated, that it's not a beach ball being held underwater. It's absolutely insane. Now, next, let's go over to China and check out the Shanghai Gold Exchange and check out what's going on with silver there. And don't you worry, all right, we love gold as well. And we are going to get into the gold price also. Okay, here we go. Our friend, the Oriental Ghost, and he gives us Friday's data on silver, and then we'll go back and check at the current price. But right now, guys, last closing numbers we had from China, $37.50. Okay, that's the Shanghai Gold Exchange, and that is silver, and that is the physical market. That's essentially a physical market in China. So that's the physical price of silver in China. Now, again, $37.50. Let's go look at what the United States, the paper market, is telling us the silver price is. And this is in the futures market, $36.05, a full $1.50 less. And again, that's the futures market, and that's the paper market. It's just absolutely unbelievable what they're doing right now. Now, what's the big driver for the gold price and the silver price? We know, and we're going to cover it more. We're going to listen to what Bank of America, this is like the Bank of America, one of the biggest banks in America, what they're saying, but we know as well, it's the devaluation of the U.S. dollar. It's the printing of the U.S. dollar. It's the U.S. government's ability to create currency out of thin air. And wait till you hear what Trump is saying to Jerome Powell now as well. We'll get to that also. But we had a big milestone, guys, we need to have a little, I don't know if you call it a party, maybe a wake for what's going on. Let's go out and look at the U.S. debt clock, because we hit a milestone. That's maybe a more accurate way to say that. Okay, here we go. USDebtClock.org, one of our favorite places to visit, and we finally did it. It seems like it took a little bit longer than we maybe initially anticipated, but the U.S. national debt in the upper left corner, which I'm circling in green for you right now, has now officially breached the $37 trillion mark. A lot of distractions going on in the market right now. Obviously, the situation in Iran, unfortunate, nothing that any of us want to see, war, further wars. But guys, look at that. We hit $37 trillion in debt. You know that makes the interest expense go up. You know that makes the deficit go up, which in turn makes that debt number go up even higher, which just turns into a gigantic debt cycle. We haven't looked at this for a while, and we aren't going to be able to circle it, but the dollar to silver ratio right now sits at over 1,100 $100. What that means is that for each 1 ounce of silver that the world produces every year, your United States government proudly prints via the M2 money supply $1,100. The paper to silver ratio down here, 364 to 1. Okay, that means there's 364 paper ounces of silver for each physical ounce of silver. And you know what? Let's go back to the dude, because I believe he had a post that addressed that brought out. We love the dude. We love Shanghai Ghost. We appreciate the content that they put out. Hold on here. Let me see if I can find it. Here it is right here. He points this out. Let's assume the paper to silver ratio is 364 to 1, which it is, right? We just looked at that, but we'll circle it again here on his screen. Okay. If derivatives fail, would that make silver 364 times $36 per ounce, or 13,000 an ounce? Sounds ridiculous. You believe one Bitcoin is worth 100,000. Silver is arguably the most important asset on the earth. That's why they manipulate it. I've always called silver the original cryptocurrency, right? It's decentralized. No central government takes over it. But that just shows how astounding the numbers are, that if the derivative market were to fail, in theory, then right now there's 364 derivative ounces for each 1 ounce of silver. If you do some simple math, right, the value of silver, the actual physical metal, and you probably yourself own some of that, it's astounding. It is absolutely astounding. All right, next thing, let's move on to Trump. Did you hear what Trump said to Powell? I mean, he is pushing, there's so much craziness going on in the world, but then you have Trump pushing Powell to do something that would be never had been done before. Let's go take a look at what Donald Trump, the pressure that he's putting on Powell. From CNN, we get this. Trump calls for the equivalent of 10 Fed rate cuts. And wouldn't that be interesting? I got a couple paragraphs that we got to dig into. Trump on Thursday continued his extraordinary and targeted verbal attacks on Federal Reserve Chair Jerome Powell, our old friend Gomer Powell. Surprise, 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 calling for a massive 2.5 point reduction in interest rates. He said, too late, Jerome Powell is costing our country hundreds of billions of dollars. Trump posted on Social Truth on Thursday. He's truly one of the dumbest and most destructive people in government, and the Fed board is complicit. It's unbelievable that the president of the, not a political statement, but to me, it's just plain unbelievable that the president of the United States is saying that about the chairman of the United States Federal Reserve. He says, too late, referring to Jerome Powell, too late's an American disgrace, Trump continued. There's never been a 2.5% cut. There probably won't be a 2.5% cut, but just the fact that we know Trump, and he's, let's say, rather aggressive in his approach with things, is saying that the Fed should cut rates by 2.5%, and then saying things about Jerome Powell. It's really unbelievable at this point. Let's move on to Bank of America next. But first, I want to say thank you, to First Mint. They're the sponsor of the gold and silver content here in the basement. There's one of their latest coins, the Silver Dragon. First Mint is a mint located in Las Vegas, Nevada, creating world-class silver products. They're owned by First Majestic Silver. That's the company run by Keith Neumeyer. So what's unique about First Mint is they mine the metal. They mine the silver in Mexico, ship it directly to the mint in Las Vegas, create these products that are one of a kind, right? You can only get these directly from First Mint, and then they come directly to you. Remember all that paper silver we were just talking about, the COMEX and the LBMA? Well, when you get silver from First Mint, it has never been touched by the LBMA or the COMEX. They got great service, great selection. They have a discount code, VIPRB, that you can use. It's a company you can trust, run by Keith Neumeyer. You can check out their website, firstmint.com. All right, let's move on to what Bank of America is saying about gold and silver. They have some interesting things to say about silver, but everybody thinks, oh, war, that'll drive up, the wars going on, all these things happening will drive up the price of gold, and they will. But is that what really is going to get gold to $4,000? Let's see what Bank of America says, and you can decide for yourself whether or not you agree with them. This comes from KITCO, our friend Niels. Middle East chaos won't drive gold prices to 4,000, but this will. This is from Bank of America. Gold prices have fallen back below 3,400 an ounce as the conflict between Israel and Iran has not seen regional escalation. Not yet. Okay, this was before what happened over the weekend. But while the precious metal continues its broader consolidation, commodity analysts at Bank of America say it still has a path to $4,000 per ounce. Although gold is a popular safe haven asset, historically, event-induced demand has never proven to be sustainable. And I've experienced that. Have you experienced that? Right? Like something will happen. The price of gold, the price of silver will shoot up just based upon one event. But that's not what really drives the price. And let's listen to what they say. It says, when it comes to gold, wars are not always a clear-cut bullish price driver. The analyst said the conflict adds, however, to the confluence of factors, right? So it adds, but it adds to all the other factors that come together that have been supportive for the yellow metal. Rather than focusing on specific geopolitical events, Bank of America analysts are monitoring the broader economic landscape and gold's growing appeal as an important global monetary asset. This comes, and somebody, and I'm going to cover this in a future, Nassim Taleb basically said that gold has become the world's reserve asset. We're going to dive into that one in a future live stream. But all this comes as U.S. government debt continues to grow at unsustainable pace. Quote, and then they talk about silver. So hold on here, my silver friends. Market concerns over fiscal sustainability, that's that U.S. debt clock we just looked at, are unlikely to fade, regardless of the outcome of Senate negotiations. Rates, volatility, and a weaker U.S. dollar should then keep gold supported, especially if the United States Treasury or the Fed is ultimately forced to step in and support markets. As such, while wars and conflicts are usually not sustainable price drivers, we see a path forward for a gold rally to $4,000 per ounce over the next 12 months. And we're going to come back because there's another blurb about silver that's very important for us to pay attention to. But basically what they're saying is the U.S. government's economic, financial, fiscal is the fancy word they like to use, situation is unsustainable, cannot continue the way that it is. And what's eventually going to happen is this guy that our president calls a disgrace, Jerome Powell, is going to have to monetize the debt. And that's just a fancy term for this, printing money, right? There's the old toilet paper roll, because it's going to get to a point where the debt has gotten so huge and the interest expense has gotten so huge and nobody wants to buy the debt. And when nobody wants to buy I dropped upstairs Susie. Sorry, Susie. That's my wife, Susie. She communicates via walkie-talkie, although she's not home right now, so she's not turned on. Nonetheless, when nobody wants the debt, that also makes interest rates go higher, because the government has to pay higher interest rates to induce people to want to buy the debt. That makes the interest expense go higher, which makes the overall debt go higher, the deficit. It's a horrible, horrible situation we're in. What Bank of America is talking about, as I understand it, and I'd be curious what you think about it as well, is that eventually the U.S. government is forced. They're given no option, either the Fed or the Treasury, to monetize the debt, to print money. And that makes the real value of dollars go down. Think back to the C-19 crisis when they printed all that money. What happened shortly thereafter? You remember going to the grocery store? I remember going to Aldi, and the bag of potato chips that was $1.09 5 years ago now costs $2.50. And that's across the board everywhere. So that's what will happen. And what that does, right, at the end of the day, let's bring this on home, let's bring this home to silver and gold, is that makes the price of silver and gold go much higher. Now, Bank of America also had something very interesting and specific to say about silver. We'll get to that next. Right now, I want to say thank you to our other sponsor of gold and silver content, First Mining Gold. It's a stock I've owned for years. I'm not a financial advisor. Don't make any financial decisions regarding precious metals, stocks, bonds, mutual funds, anything based upon what I'm saying today. But I do want to tell you, I have owned the stock for years. They are a Canadian gold development stage company. They have two massive projects, right? Gold in the ground in Canada, Duparquet project in Quebec, and the Spring Pole project in Ontario. And they actually have a third project that has about 1 million more ounces of gold in the ground, the Cameron project, also located in Canada. I love these companies, these development stage companies, because in my opinion only, they are really undervalued right now and offer a great opportunity for capital appreciation. And that's across the board. That's all of the development stage companies, both silver and gold. You can learn more about First Mining Gold at their website, firstmininggold.com. And if you ever have any questions, you can actually talk to a live human there, Mr. Paul Morris. You can email him, paul@firstmininggold.com. Now, let's go see what the Bank of America people are saying about silver. Okay, so after they talk about gold and the fact that the U.S. government is basically up a creek without a paddle. Hold on here. We got some funny colors going on. Okay, you're with me now. Hopefully we're still live. We're having some issues lately, internet-related issues. So I don't know. Are we live or did we lose everybody? Are you guys there? Shoot me a 5x5 in the comments, please. Basement dwellers. That's right. Hey, guys, thank you. Did I ask you? Please like, share, subscribe to the channel. I want you to come back to the basement. And I'm talking to you, right? We're basement dwellers. We're silver heads. We're gold heads. We love this stuff. We're precious metal maxis, I guess you could call us. So please, subscribe and please come back. Although silver, this is Bank of America in green, had gone through a period of underperformance, the market has remained in deficit. We know that, right? For the last, 4 or 5 years, mainly due to constrained mine supply. Hence, market participants have long anticipated a normalization in the gold to silver ratio, which has finally occurred. I don't know if I agree with that. I wouldn't say it's quite normalized. Last I checked, it was still like 90-something ounces of silver to get 1 ounce of gold, accompanied by an increase in assets under management at physical-backed ETFs. So we are seeing some ETF inflows in the silver market. Hold on one second. I want to get a quick sip of coffee. We had a price objective. Okay, let me back up there. So I didn't realize that. We're having a increase in physical flows, money flows into the silver ETFs. I know there's a big controversy about whether or not they actually own the silver. But still, the fact that people are putting money into the silver ETFs is a good thing. The other thing we need to consider is demand for physical silver at the retail level. Not me and you, right? Because we love our silver, but just in the general investing community, that has been very subdued. When that turns around, that could create another 100 million ounces of silver demand per year. And I happen to believe, hold on a minute here. And I happen to believe this. I think this is the sleeper. And I'm going to pound the table, okay? I pounded the table 2 years ago about the fact that we could get remember the gold bear was blindfolded, $2,500 gold, right? I pounded the table about stagflation. We pounded the table. And now everybody's talking about stagflation. You know what else we can pound the table about? And I'll give you the reason why this could be a huge driver of silver. And this comes from Bullion Betty, right? Jewelry. Look at that. Bullion Betty is a great member of our community. She's got an Etsy shop. Go on there and put in Bullion Betty. This is a silver silver coin. I think it's from Ghana, right? On a beautiful silver chain. Silver jewelry. Nobody's talking about it. We're way ahead of the curve. So don't expect mainstream media to talk about it for like another year, because we look around two corners, and guys, the demand, according to the latest data that we've been given for silver for jewelry, is like 200 million ounces per year. Correct me if I'm wrong. Email me. But that's what I saw from the Silver Institute. That's massive already. But I'm telling you, people are going to be moving. I love gold. Don't get me wrong. Me personally, and we all have our personal, I like silver. I would personally, from a money perspective, yeah, give me a 1 ounce gold coin. I'll take it. But from a beauty perspective, and I know a thing or two about beauty, I think silver jewelry, I love silver. And I think that we're going to get a silver or a big upturn in demand for silver jewelry. No doubt about it. Okay. That fact alone, plus an increase in retail investment demand in silver, could create a massive move in the silver price. Not even talking about industrial demand. I mean, we beat that one to death over the years, and we know that's real. I'm not saying it's not there. They said this is Bank of America, we had a price objective of $40 an ounce for Q4 of 2025. $40 an ounce silver. We'll go do a quick silver price update here in a second. So that rally arrived a bit earlier than we had anticipated. Now imagine that. Those analysts were wrong. But we're sticking with our forecast. If trade disputes normalize and global growth accelerates, silver should take another leg higher. Now, let's go out and just get an update here. We've been on here for a while. On the silver market, looks like it was still, let's see here. That's the S&P futures down. The general market futures are down, but let's go look at the metals. Yep, silver's still up a hair, about 2 cents. Gold up about $2-3. So not a big move on the heels of this event that happened last night, the bombing of Iran. I'm not going to talk about that so much, because basically, right, I mean, it's been covered ad nauseum on the other news outlets. But what I am, I think, surprised about, I thought in my mind, kind of like what Bank of America said, it was like, buy the rumor, sell the news type thing. I had anticipated that we might get a downturn in the silver price. Now, again, right now, let's focus on silver. The critical level that we need to keep is $35 an ounce, right? We broke through, we had a double top. We broke through the third time and have gone above that $35 level. We're at 36 in the futures markets. So that will be what we will be definitely keeping an eye on. I don't know. What do you think? Right? When we look at all this data we look at what's going on in Washington. We have a president that's calling for a 2.5% rate cut, which has never been heard of, saying some extremely disparaging things about the chairman of the United States Federal Reserve. Okay, we have wars going on all over the world. Remember this about gold and silver. They are DeFi. Do you know what DeFi stands for? Decentralized finance. It's a big word that they use in the crypto world. So I used to hear it 6 months, a year ago, and I'd be like, DeFi, that's a crypto term. I don't want anything to do with it. Gold and silver, and I've often said, this, silver is the world's original cryptocurrency. It was used as money before gold. Our DeFi, decentralized finance, meaning there's no one government. When silver has withstood all types of wars in the past. Silver has withstood any political system that's ever occurred, right? It's decentralized. No one government can control for any long period of time. I know you may argue that the United States government manipulates the silver price, but the reality is, right, and we're seeing that with gold now as well, they are decentralized. The value of gold and silver is not determined in reality by one centralized authority. What it's determined, it's democratized. It's determined by you and me and the people of the world that want to store value outside of the paper fiat money system. Okay, that's what's happening. That's what will continue to happen. And look, whether we're talking about 10 months from now, 10 years from now, or 100 years from now, that will still be the case. Because guess what? 1,000 years ago, that was the case. That will continue to be the case. I also want to say thank you to my channel sponsor, Ledger. They are the cryptocurrency hardware wallet security leader, top tier company, as well as MoonPay. They are the leader in fintech technology and a highly respected company. But I also want to say thank you to you for being here today. It's a big deal when you join me here in the basement. It's fun. We have a good time. There's so much craziness going on in the world, right? We're on the side of precious metals. That's where we know value has been stored for thousands and thousands of years and will continue to be in the future. You take care of yourself, okay? And I will see you next time.